Good day, everyone. This is Patrick from UsdJpy Code Trading System, and this is Saturday, the 23rd of April, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the fourth week of April. And let's begin with spot gold. After an attempt to reach the 2,000 round figure level again on the Monday, there was a rejection and what looked like almost a shooting star candlestick here, and retraced lower back down into the 1950 round figure. So all the way 500 pips back down to the 1950 and consolidated for a couple of days before falling through again lower, targeting the 50 pip retracement of this swing move. So this level at 1974, this did offer some kind of resistance. It did attempt to climb up above that on the Monday, but then fell right back down again. So now it's back to the 50 pip, just above the daily 55 EMA. There could be consolidation in this zone early part of next week before it could attempt to break down lower, back down to the 1900 round figure, and maybe into this zone as well, along with the 62 pip retracement. That's where this swing low wicks is as well. All right, let's draw that up here. And this zone for now is a support, but let's move it down here to this zone. This area here is the intermediate support. This is clearly a strong resistance zone. And this area between the 1950 and the 38 pip retracement may offer some resistance here. All right. Right, so let's see whether this week the US dollar is continuing to push up higher after Thursday's turnaround. You'll see that later on we analyze the DXY US dollar index. And this week there's a number of economic figures coming out with the durable goods, advanced GDP, and also the PCE price index on Friday. That's another key indicator for inflation. And so we'll see how much pullback there is for the start of the week before it attempts to drop. If it does bounce back, it needs to break back up above the 1950. 1950 round figure and climb back up above the fib. So otherwise, if it drops below this 50 fib, then it could attempt to target the next fib at the 62 fib and the round figure. All right, Let's also take a quick look on the weekly time frame. And yes, that's a very bearish engulfing candlestick over pulling down lower than the previous week. Okay, let's take a look at the US dollar index, the DXY, and to see what drove it back up again on Thursday. So here's the US dollar index, DXY, and this was the turnaround after the US dollar was making a retracement, a significant retracement on the Wednesday. Managed to find support here on Thursday after dipping below the 100 key level. And that was from comments from Fed Chair Powell, where he made hawkish remarks that the interest rates may need to be front-loaded and sizable, so it could be a 50 basis point increase in the next meeting in June, and followed by a couple more, so perhaps 3 consecutive rate hikes of 50 basis points, and attempting to target 2.5% interest rate by the end of the year, and probably 3.5% by the end of next year. So that was a bullish remark, and this caused a rebound or triggered a rebound in US dollar, and continued on Friday right into the 200-pip extension. That was the resistance zone that we had marked earlier. And you can see that it's almost within few pips of that. That's high was 101.20.7, and this is at 101.21.1. So within 0.4 pips of the target. So this is this was the target that was going for, and now this area at the 162 fib is a potential intermediate support. And this area is definitely a key support zone with this swing high. Can remove the rest for now. So that was the turning point for the US dollar, and flipping it around. Now let's see if there's enough momentum to carry this into next week and pushing up to the next level. It's going up to 102 and 30 cents here. So that's going to be next key resistance zone. Let's also check the weekly time frame. And yes, at the start of the week, there was a gap up as well. And for now, it is at this key level here. Key resistance zone. So there could be a pause in the bullish momentum and consolidation first, because the next climb is quite significant. That's major. So that could be a all-time high almost. This was at 103.82, and this is at almost there, 103.76. Okay, that will take a while, but for now, the next zone will be at the 102.30. Right, and this week there's also a number of US economic figures that's going to be released, and we'll see if there's any trigger from those as well. Right, let's move back to the other pairs and see the impact on the other pairs with this bullish US dollar. Let's move on to dollar against the Japanese yen. It has started to consolidate at least over the last 3 days of the week after pushing up from below the 127 round figure from the 138 FIB extension, and managed to hit the 200 FIB extension right at the 129, just spiked through the 129 round figure. Could not reach the 130, a big round figure at 130, and pull back to retest the 162 before consolidating over the last couple of days of the week. So this resistance zone was broken, and let's move it back higher now. The 130 is definitely the key resistance here, and let's move back to this one here as an interim. It's interim resistance. Definitely a key support here, but I think we can move that into this zone with the 138 FIB extension along with the 127 round figure. So for now, it's consolidating in this zone. See if it dips lower to test this support. And if it does break out higher, it will be resisted by the 130 round figure. Right, so for now, I think that's that may constrain the Japanese yen if it's going to consolidate for next week. We'll see if the US dollar is able to push it up higher to reach the 130, because the US dollar has been attempting to push up higher as well. But looks like it's time for a pause in the yen. Let's take a look on the weekly time frame. This needs to go back quite a ways. Let's go to the monthly time frame. Yeah, this is quite a way back here. Let me Move the monthly pivots. Okay, it continues bullish and breaks through the 130. There is a 131. It's the next fib extension at the 262 fib extension. And the next swing high is all the way up at 134, almost 135. Yes, 135.16. That's all the way back in 2002. That's 20 years ago. So let's extend this level here. May not get there, but never know, and may take a while as well. And it has already passed through these two swing highs. Let's move this one here. We can move it to this level here. Okay. Okay, so we'll see how long this consolidation may take. It could be the whole next week. And we'll see what pattern, what consolidation pattern it may form, and whether it's time for a significant retracement or it's just a pause until another bullish move and breakout. And there's a lot of US economic data coming out to potentially drive and push the dollar yen as well. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.